Okay, so good morning, everyone. Happy New Month, okay? And welcome to another week of study. And for this week, we're going to be looking at a very, very interesting topic. And this is one of my favorite topics as we have college with. Please give me a minute. So this is my one of my give me a minute, please. Okay, so this is one of my favorite topics as we got college, and I'm going to tell you why. I love the topic so much at the end of the topic of the summary. I'm going to tell you why I love this topic so much. So, I believe you all can see my screen. If you can, the topic for us today says reading and analyzing price action. Reading and analyzing price action. So, I'm going to do the teaching method for this class is going to be theory. Then if there's time, we'll do a little bit of practical. So then the topic for us today is reading price action, a beginner level. Let's go to the next. First slide for today says introduction, the language of price. So price as a language, and what we want to be looking at today is how to read and also understand the language of price. So let's get down to business. Now, price action is the most purest form of the market communication. So price action is the most purest form of market communication. So that means that see, I really love it if you can pay attention to every detail that is in my notes because I didn't just write it down there because of my feeling like writing, but it's there because of there is something I've seen now. That's true. So now the first line says that price action is the basic of the market communications. That means that it's the purest form of market communication. So that tells us first that the market can communicate. So the market is communicating to every trader out there. So the question that we should be asking ourselves as traders is if we can understand or maybe interpret the communication that the market is creating. So that is the reason for this class. The class say the topic for today is leading and analyzing price action. First, after I'm going to look at today is the language of price. I'm going to stay here for the kids. Then, why I stay here because of many traders will not, many traders will not necessarily, or maybe many foreign traders out there will not know that price can propagate. So let me give you a very good scenario of what I'm talking about. So let's take for instance the animals. The animals do communicate. We all know that animals communicate, right? Yes. But then we as humans, we can't interpret their communication. So does that mean that they are not saying something? They are saying something, but then we don't have the ability to interpret their vocabulary. So that's the same way for the forest market. Forest market is always, every time you see a red candle, a bullish move, a bearish candle, the market is communicating. But every candle is a communication from the market telling you what it wants to do, what it is doing. So it means that as trader, our first one of our most important job or maybe role as aspiring traders who want to trade forex, one of the most important things we need to learn is how to interpret and how to also read price actions. That's the reason for today's class. So the reason for today's class is so that every one of us will be able to read and also to be able to interpret the um, vocabulary of the market. You know, many a times as a forex trader, what I do sometimes is that when I'm doing my probably my weekly or let's say my monthly analysis, what I do is that I just put on the charts and let's say a pair, for instance, ADJ last night when I was analyzing ABJPY, I knew it was a bullish move. I know I'm going to expect the massive buys this week and maybe this month because I've done an analysis for this month actually on WPS3. So when I was doing that, I think I did that analysis on, if I'm not mistaken, either October 2nd or October 3rd. Independence Day was Wednesday. Okay, yes, Independence Day. So I did it on Wednesday morning around somewhere 4 p.m., 4 a.m. when I did that analysis. And then at some point when I was doing my analysis, you know what I did? I just stopped analyzing the market and was just looking at each candle, looking at each candle based on the time frame. So I switched from the 8-4 to the daily to the weekly to the hourly time frame. What was I doing? I was just trying, I was asking myself the question, what is this market communicating to me? This is the reason why I say that this topic before today is one of my favorite topics in forex trading, and I love it so much because I believe that one of the things that makes you a forex trader is your ability to be able to read and dissect the communications of the market. So now we are seeing, just look at how long it took me just to explain the first line of my teaching. Now, it is how buyers and sellers express themselves without needing feedback like indicators or oscillators. So what I'm saying is that price action is how buyers and sellers express themselves without the need of feeders like indicators or oscillators. So indicators tells you this and this, oscillators the same thing, is almost the same thing as indicators. But then what am I going to say? Can I say that price action is uh is is in the way buyers and sellers express themselves. So if you can read price action well, it means that you will be able to read what the buyers say, and you will also be able to read what the sellers say. Now, every candlestick, take note, every candlestick, every push and pull. When I mean push and pull, I mean every bullish candle and bearish candle tells a story of fear, greed, and imbalance between the bulls and the bears. So every candlestick you see in the forex market is not just there because it wants to be there. This is the reason why. This is the reason why I always teach my students and tell them first that price is not just moving randomly. When you see price doing what it's doing, or when you see it, even in a ranging market, when the market is ranging, price is not just ranging because it feels like ranging. No, price is doing something. So this is all about interpreting price action. Now, every candlestick you see, every bullish trend, every bearish trend you see, it tells the story of the fear, the greed, and imbalance between the bulls and the bears. Now, reading price action means learning to listen to that story directly from the chart. So your ability to read price action is that as a trader, you don't need indicators. This is the reason why I love this topic because of the goal of this topic is to debunk the feeling of indicators. I teach about indicators. When I started trading, I used to use indicator. Take note, I use the word used. That means for past tense. I don't use indicator again. Why? Because I'm beginning to, at the point I am now, I can, so to a certain extent, probably not 100%, but 80%, I'm sure that I can read price action and know and listen and learn to the story that the market is trying to say directly from the charts. That is the reason of today's class. So when you understand price action, you no longer rely on indicators to tell you what is happening. You see it yourself. So this is against topic because why? It's key indicator. I'm not saying indicators do not work. I'm not saying that those the hours are stop the moving averages do not work. They work, but then I've always asked myself a question when it comes to indicators, and that's the question I want to ask you. The market was made the market is ruled by the market makers, which is the big banks, the hedge funds, and the market makers do not want real retail traders to profit from the market. Why? Because whenever we lose as retail traders, the big guys, the market makers, they have more profits. So that means that they would never want real retail traders to win. And then these indicators that we are using, the RSI, moving average, MXPD, these indicators were created by the market makers. Now, this is my big question to you all in this class. Would the market makers who do not want you to win, who do not want you to make profit, would they create an indicator that would allow you to make profit? That's a question you should ask yourself. The big answer is no, because definitely I wouldn't want to create something that will enhance you to make profit. So it means that every indicator that we see out there, no matter how good they are, no matter how best they are, was never made for you to make profit of them. So this is the reason why as forex traders and as traders we must aspire to begin to understand price action so that we can no longer rely on indicators to tell us what is happening. We begin to see ourselves. I can't remember the last time I used indicator. I can boldly say that for the past 1 year of my trading journey so far, I've never used indicator. Well, I've thought about indicators a lot of times, but I've never used indicator. Why? Because of my ability to understand what price action is. So stay with me, everyone in this class, and I assure you, probably by the end of the class, even if you don't learn everything, then you're going to learn something. So let's move to the next. So that's just the introduction of today's class. Now, the next question is, what is price action? What is price action? Now, price action is the movement of price over time shown on the chart, typically two candlesticks or bars. Now, so price action is the movement of price over time. So it means that for every time frame you change, for every probably on the 12 time frame, you watch the way price move, you can see price action there. If you come to the daily time frame, see how price is moving, you can see price action there. If you come to the weekly time frame, you see how price is moving, you can also see price action there. If you come to whatever time frame you come to and whatever chart you put it on, you are going to see price action moving right there. So it's as easy as you say, okay, guys, this is what price action is. Just simply the movement of price over time. That's exactly price action. So now let's go to the next line of the class. I said, the next line says it reflects all current market information. So price action reflects not just all the market information, be it economic data, trader sentiment, institutional positioning, and liquidity. So if you can read price action, you will be able to know what is the economic data, even without studying fundamentals. If you can read price action, you'll be able to know what is the current traders' sentiment in the market. This is sentimental analysis. So there's a lot of things that is tied up with price action, basically. It's not just the technical analysis and the what they call the reading of charts, the candlestick. There is an aspect of price action that involves sentimental analysis. That is where we begin to deal with trader sentiment. But then that is not the class for today. There's also a part of price action that deals with economic data. That is also the macro and the fundamental analysis. That is not for today's class. And then also, when you study price action, you will be able to know institutional position. What am I saying? You will be able to know where the big guys want to buy the market for. You'll be able to know what the big guys are trying to do now. And then, of all things, we'll be able to spot liquidity all over the chart. See, every time I look at the market, all I see is liquidity. I don't know about the Euro USD, the GBP USD and those pairs, but for the pairs I trade, the ADJPY, the GBP the USD the JPY, the MZD I can tell you practically these spots are liquidity. Why? Because of my strength on price action. Why am I even emphasizing on price action this much? It is because I want you to take it as a very, very serious, what do I call it objective that as traders that as we become traders and then as we begin to go into the forex market, let us try as much as possible best to develop our understanding of price action, because to tell you the truth, the more you understand price action, the more successful your trades are going to be. No jokes, I can tell you this for a fact. The more you understand price action, the more successful your trades are going to be. This is today is the first Monday in October, and from October 1st and today, I've taken over six trades, and the six of them are all in profits. It's not because of I been here for long, or because of I understand one big thing. No, the reason behind I'm telling you, I'm being vulnerable to you guys. I'm telling you the reason behind my massive win rate, my profitability. It's not necessarily because of I'm doing a big thing. It's because of how much I invested in understanding price action, and I saw how it changed my analysis. So please think of it like this: indicators are translators. Price action is the original language, and trust me, you want to be able to read the original language of markets. Did I tell you one of the iconic things about the original language and translation? Now, the original language, when you speak the original language, it could mean a lot of things. It could bring about probably it could have about 2 to 4 minutes. There are some languages that if you say one word, it can mean about 4 to 5 things. I know in Igbo, you say one word, it can mean about 4 to 5 things based on your expression. But then, if you translate that word, it will just give you only one meaning. Okay. So now, the best thing you want to do is to be able to understand the original language, so that when you apply it into that language, you can for yourself know what price is saying based on current expression of the market. That's just it. Because someone who just know one interpretation or the one translation for one word, and that word has 4 minutes. Whenever the word is used in a different expression, the person will think, oh, it's still the same thing, not knowing that it's quite different. You get what I'm saying? So please, as traders, strive for price action money. Now, the next slide. Now, what is the building block of price action? These are the three levels of price action that I know that if you focus on it, you are going to see change in how we interpret the market. No jokes, no jokes. If you focus on these 3 levels, in fact, these 3 levels is what price action is all about. These 3 levels is what price action is all about. I can tell you for free what we on experience and tell you, okay, this is it. And trust me, when I tell you this is it, I really meant that this is yours. So now let's look at just basically 3 levels. We have the candlestick level, we have the market structure level, and then also we have the key levels. So we have the 3 focus points as traders we need to focus on if we want to increase our level of price action. Number 1 is market structure. Number 2 is candlestick. Number 3 is key level. So you want to be able to interpret price well, focus on these 3 things. I'm going to take them again: key levels, market structure, and candlestick. So these are 3 major levels you want to focus on as traders if truly you plan on scaling your price action knowledge. Is that it's just that speaking. So we're going to be taking it one after the other. So let's start with candlestick. Now, candlestick. Each candlestick, each candlestick represents a battle between buyers and sellers over a chosen period of time. For example, we have the 1 hour, the 4 hours, the 1 day. So every candlestick you see out there is showing you a battle between buyers and sellers. Now, the The body shows where price. What about the candlestick analysis before? So the body shows where price open and where price close. Now the week, which is the shadow, shows rejection or extension beyond the body. Now bullish candle, the close is always greater than the open. It means that buyers dominated. Then when we see bearish candle, it means the close is lesser than the open, and it means that sellers dominated. Now let's pause it there. So the summary of candlestick analysis is that the more bullish candle you see tells you what price is telling you. So if in a trend, or maybe let's say on the 4 hour time frame, you see hold on, the 4 hour time frame, price is bullish. Hold on, price is bullish, and then I'm going to show you these things on the chart. Price is bullish, but then as price is bullish, you are seeing more of bearish candle, less of bullish candle. Price is bullish, but you are seeing more of bearish candle and less of bullish candle. That is telling you that sellers are beginning to dominate the market. So it's telling you, it's just giving you an idea that you have to begin to look for sales. It's no news. I understand that the market is bullish, but based on the candlestick information, we are seeing more bearish candle. And when you see each bearish candle you see in the market tells you that sellers are dominating. So it means that the more bearish candle you see, the more we have sellers dominating. And the more bullish candle we see, the more we have buyers dominating. Do you get what I'm trying to say? So it means that as a trader, when you see this, it's just very, very easy. There are times where I've seen that we are in an uptrend. The price is in an uptrend, but then when I check the candlestick formation, I'm seeing more of bearish candle. So I'm like, okay, seeing more of bearish candles telling me that, okay, I think it's about time I begin to look at for self as a trader. I've seen it happen over and over. It's about time I begin to look for self. So what would I want to do now as a trader? I'm looking at for sales. That is the secret to analysis. Very, very easy. So now the key idea is that a candle with long wick signal rejection. The market tried to move on the way, but got pushed back. So now it means that if you are in a bullish market, or you stay on the bullish scenario, I'm going to show you this on the chart. Stay on the bullish scenarios, and then we are seeing bearish candle with wicks, like lot of wicks. That simply tells you as a trader that the market is about to begin to buy. It means that the market wants to sell, but then the buyers is pushing the market back up. And the more weeks you see, tell you that, okay, most likely very soon this market is going to buy. You know, last week on Wednesday, I had an analysis on APYs. I've done a monthly analysis for the pairs that trade 5 pairs. Done analysis for the 5 pair trade for this month, and all were bullish. But then I said that I told some couple of my guys, those that are around me, that I expect one more sale, one more bearish movement on the market to take out something, and then we're going to have the rally. Now, a lot of people, when I said that, and then when I said that, the market was buying massively, but then when I said that, it didn't make sense. But the next day it happened, and today being Monday, there's a massive rally. What am I saying? What was the secret behind it? I saw a lot of weeks below, like a lot of weeks below. So I just knew, without even doing much analysis, I just knew that this market is going to buy because of why? The market is rejecting for sell. So the candle with long wick signal was rejection. So when you begin to see price action that we are seeing candles with long wicks, if we have more bearish candle with long wicks, that tells you that most likely the market wants to go bullish. And if we have more bullish candles, you don't that tells you that most likely the market is about to begin to go bearish. Check it out on your chart. This thing I said just now happens every day. Now, also, we have a candlestick with bullish bodies. So, when you see candlestick with more bodies than weak, for example, when we have the involving candle, the marbles candle, that's telling you that the trend direction is very, very strong. So long week tells you rejection, massive or big body tells you strong trend. That is how you can use candlestick to interpret price action. Then the second level is the market structure. Now, market structure is very important, and why? If you ask me to define market structure, I'll tell you that market structure is the parts of the market, basic definition. So mainly, if you can interpret price action, you can be able to interpret if you can interpret market structure, you can interpret the parts of the market. Now, price always moves in a pattern. There is a pattern that price always moves. No jokes. Every market you see has this pattern. You have the impulsive move and the correction, which is the pullback. So we have an impulsive move, and then we have a correction, be it a bullish trend or a bearish trend. So in a bullish trend, the impulsive move is when price is moving upward massively, and then the correction, which is the pullback, is when price is retracing. So every massive, there is no pain in forex that market just continues to go. No, even if the bullish momentum is so strong, after it has remained bullish for a while, there will definitely be a correction move. You get it? So we have impulse and we have correction. Now, structure helps you to identify if the market is trending or ranging. So, structure helps you to identify what the market is doing right now. Is it trending? Is it going in the up or in the downtrend, or is the market ranging? And like we all know, we have uptrend now. In the uptrend, we have higher highs and higher lows. Then we have, and in the downtrend, we have lower lows and lower highs. And then the sideways market equal highs and equal lows. Now, how do we interpret market structure in respect to the market? Now, once you can read structure, you will know where the market is going and where it's fast. This is massive. See, one of the secrets to my analysis, I've given us secrets, but then one of the secrets to my analysis, one of the secrets behind my ability to, if you've been with me for a while, then if you've seen my analysis, you've seen my charts, you'll notice that if I send no jokes, I'm sure so basic that if I do let's say about 5 or 6 analyses, I'm sure that more than half of it will go in the direction. I'm sure that if I do 10 analyses, not trade, so there's a difference between trade and analysis. Analysis is just you predicting, okay, you're going to go up, you're going to come down, you're going to do this, you're going to do like this before you do like this. That's what analysis is all about. And then trade is you said, okay, I want to buy from here, I want to get out from here, I want to do my stop loss here. That is trade. But then in terms of analysis, speaking about analysis now, I'm sure, I'm not bragging, I'm not saying it because it's a lot of buying, but it's just being true. I've seen it happen over. I'm sure that if I do, because the maximum I've seen so far is 6. So I don't trade much pairs, so I only trade maximum of 6 pairs. So I'm sure if I do 6 analysis, I'm sure that at least 4 there in direction. And should I tell you the secret? The secret is market structure. See, the way I could remember when I was studying market structure, I took 2.5 months just to study and understand market structure on my own. without any instructor, without anybody. I like go to, and every day, guess what? Guess what? Every day I was spending at least 12 hours on the chat. So you see that I didn't just get to this place because of luck. That's why I always tell you guys every time I'm done teaching, I will say this word: practice, practice, practice. See, you can't tell me that you want to be good at what you are doing and then you're not giving me time. There's always going to be possible. No way. So what differentiates you from every other person is how much time you put into what you are doing. That's one of the things I feel. So back to market structure. So what I'm saying is that I have a success rate of 4 out of 6 analyses for this month of October. I did 6 analyses. Out of the 6 analyses, 4 laid out. The 2 that didn't laid out. Okay, actually 4 are will I say 4.5 because for one of the analysis I had 2 zones and 5 reacted from the upper one and I was thinking it was going to come from the lower one, like the values react from the upper one, push up to. But then let's see use 4. So 4 out of 6 analysis, that is 80/100. And this is not the first time it happened. It has happened every week. Every week I do analysis. So I've seen it happen every week in, week out, month in, month out for the past 6 months. What am I going to say? The secret behind this massive results that you have seen is not because of I'm a special trader. No, it's because of I understand market structure. Now, I said that in this my note now, I just said something that ability to interpret market structure, you will be able to know what the market is doing, that is where the market is going to, and where the market might most likely reverse. After the class, I'm going to share my screen to show you guys a few things so you can see my analysis. So, no jokes. It's not like I do. I'm trying to pick it here. So, what I'm going to say is that the secret behind these things is just that market structure. So, if you can read market structure, you can read price action. So, go back to your classes on higher highs, higher lows, lower highs, as simple and as basic as that class is. That class is a very strong pillar in your success in the forex market. Because I don't know what you want to do if you can't interpret market structure. I just don't know what you want to do. So focus more on market structure and see if you can solve the mystery behind market structure, you solve more than 50% of your analysis. The next thing, because after you are done interpreting market structure, the next thing you want to do as a trader is to look out for zones and no jokes. That's what I do. Once I can, so okay, I'm seeing higher highs, higher lows, I'm seeing lower lows, lower highs. Okay, the market is there, bullish. Once I solve that problem, the next thing I want to do is okay, what level will I be expecting price to react from? What level will I be expecting price to break off and so like that? So you can see that in terms of mapping out your key levels, probably support and resistance, other blocks, demand and supply, your liquidities, that's basic. That's the real work is the price action. So every trader out there is you should focus on price action. And now what makes price action so special? Once you can read market structure, we know where the market is going and where it may pass. I was talking to one of my students, I think last 2 weeks there about last week. And then I was like, okay, do an analysis on AJY. Tell me where the market is coming from, where the market is currently, and where the market is going to. Now, the student was able to tell me, okay, I'm seeing this, I'm seeing that, and I said, that is very, very good. But then, you call this market a venture market because me, I am taking massive sales in profit on this market. The secret is because of I knew that if price is going to buy, before price is buy, it is going to definitely do things. Even in one of our physical classes, I said we did an analysis and I said that AJY is going to buy massively, but before it will buy, it's going to sell massively. And It was like as though I was assigned. It's not assigned, it's just knowledge. So then that is exactly what happened. So price, so market structure helps you take note. The goal of market structure is to tell you where the market is going and where it may pass. That is also if you can solve the question of where the market is going to and where it can pass. Let me give you a secret you can use when doing your analysis. There are three questions. This is based on my experience. Based on my experience, one of the secrets I use whenever I am doing analysis on the forex. That I ask myself these three questions, and every of my students that I have taken my time to mentor and to go through that chart, I always ask them these three questions. Two question is this. Number one question, your analysis should be able to answer these three questions. Number one, what is price doing? First question you want to answer is what is price doing? The second question you want to answer is what was price doing? You get it? So you want to know what price currently doing. After that, you also want to know what was price doing. That is the previous, what the price do previously. And then also you want to answer what will price do. So three questions every trader out there needs to answer. The one, what is price doing? That is the current posture of the market. What the price do in the past? That's the previous posture of the market. And then lastly, what will price do? So if you can answer this three questions, no jokes, you would be able to, you'll be like a superstar in the market. I don't know what it means. Just give me a minute. So if you can answer this three questions, you'll be like a, not you'll be like a superstar, you'll be a superstar in the because the screen is not touching. So it's, so this I know, just give me please, give me please. And this, my screen should be visible right about now. Okay, so I was talking about the price action speed of market structure. So I'm saying market structure tells you where the market is going to. And so, okay, I was saying you should solve these three questions. What the market has done in the past, what market is doing, what market will do. If you answer these three questions correctly, you won't have, you, you will be, find yourself being in your analysis a lot of time. So let's move on to the third one. The third one is key levels. Now, why we expect specific zones repeatedly called support and resistance. So support is a level where buyers tend to step in, and resistance is also a level where sellers tend to what? Step in. Now, watch how price react around these zones. You want to look for break, rejection, or consolidation reveals traders' intention. So when you can look at how price reacts in this zone, probably other blocks, probably demand and supply, and look at how price is reacting, probably are seeing breaks, are seeing rejection, you will be able to know how the real traders' intentions just by looking at these zones. So let's go to the next slide of our class. It says how to read price without indicators. Number one, zoom out. Start with the higher time frame, the daily time frame or the 4 hours. For me, I love using the daily time frame. We'll start with the daily time frame. And what do you want to do on the daily time frame? Number one, identify the overall trend. You want to know, is the overall trend, is it bullish, is it bearish, is it uptrend or downtrend, or is the market ranging? So answer this three questions. What is the overall? See, this is how I analyze the chart. So the first thing I do is to zoom out. So I come to the higher time frame, and like I said, I love using the daily. And on the daily time frame, I want to find out this first thing. Number one, the overall trend. I want to know, is the market in an uptrend? Is it in a bearish trend? Is it ranging? So from there, you should know, okay, if the market is in an uptrend, you answer it. If it's in a downtrend, you answer it. If it's ranging, you answer it. Number two, map out major levels. Sorry, I use the word support and resistance. But then map out major key levels. So you want to map out your major liquidity levels. You want to map out your major support and resistance level. You want to map out your major order blocks, your major what's it called? Supply and demand zone on the daily time frame. And then so on the daily time frame or maybe on the higher time frame, you know the overall trend. Sometimes for beginners, I remember then when I started doing my analysis, when I started to teach myself how to analyze the market by myself, I had a book there. So I would on the book, I would write on the top ADJPY. I will write number one, higher time frame. I'll then write the higher time frame says we are currently in uptrend. Number two, we have two major liquidity zones. We have then also we have this number of other blocks, this number of this, number of that. You understand? So step one, zoom out, start with the higher time frame, go on daily charts, know the overall trend. Step two, map structure points. So map your swing highs and swing lows. Are highs getting higher or lower? So you want to know, sorry, are we having higher highs? Are we having lower highs? Which tells you whether buyers or sellers are currently dominant. So one about the swing structure, which is the swing high, swing lows. Step three, observe the candle behavior at key levels. Look at how candles fall. Strong rejection week, it tells you possible reversals. Big momentum candle tells you breakout or continuation. Series of small indecisive candle, indecision candles tells you potential consolidation before it moves. So you want to watch out how price is reacting on your zone. You want to see is are we having strong rejection week? Tells you that most likely we're going to have possible reversals soon. Are we having big momentum candles? Tells you that most likely we're going to have a breakout, or a continuation of the episode. Then, series of small indecisive candle tells you potential consolidation before a move. Now, step 4, wait for confirmation. Wait for confirmation. Let price show you its next intention. Don't predict, observe. So wait, this is the reason why I do have right mixed to reward ratio of my, and then when some of my students will see my journal with some blessing, they'll be like, wow, you're having one ratio 45, one ratio 50, one ratio 39, and then my stop loss sometimes are very, very tight. Even though that I just decided not to be doing price speculation research. You know, as you mature in whatever you do, you are going to be upgrading. So then I just decided and said, okay, for the month of for the rest of this year, I don't want to be doing that stuff because of actually I'm working on something. So I'm trying to practice something. So that's the reason why for a while I've stopped using I stop loss. But remember then I stop loss of 5 pips, 4 pips, 3 pips. In fact, of the day I had stop loss of 1 point something pips, and you would think maybe the trade would use stop loss. Guess what? That went on the way into my way. What my rate says is that observe, wait for confirmation. A wave of structure confirms a shift of trend. A retest of a broken level confirms a valid setup. Patience is your best indicator. Patience is your best indicator. If you one of the rules in my trading journal, sorry, one of the rules in my trading plan is that never pick a trade that the point of interest is above the 30 minutes time frame. So any point of interest that is on the probably the hourly time frame, the H1, H2, H3, H4, I do not take my trade. I wait. I always wait for price to give me a confirmation because patience is my best indicator of superior patience. You have to be very, very, very patient. Now, common price action patterns. What are some common price action patterns? Now, this pattern show up everywhere and reveal trader psychology in real time. So these patterns showed up everywhere and everywhere. The first pattern we want to look at is what we call the pin bar. We have the hammer and shooting star. So hammer and shooting star. Shooting star is also the same thing as what will I call it now? Inverted hammer. So we have hammer and shooting star. So hammer and shooting star. What is the meaning? It means rejection and potential reversal. So this is not the candlestick class, but we've done that. So this is just so you have an understanding of what I'm talking about. Now, engulfing candles tell you strong shifts in controls between buyers and sellers. We have doji candles. Doji candle tells you indecision that is possible reversals or pause. And we have inside bars, consolidation before breakout, and then breakout structure tells you the trend direction change. So that is just it about common price action patterns. We understand for in different now. Example of reading the flow. Let's say EURUSD has been making higher highs and higher lows. Price approaches a resistance to a large bearish engulfing candles appear with a long upper wick. The next candle breaks the previous low, which is a break of structure. That's your signal. Bulls are losing control and the market may shift bearish. No indicator, just clean price average. So when you have a zone and then price comes into that zone and you see a bearish, a massive bearish engulfing candle appear and with a long wick and probably big border with a long wick and small body, that is an inverted hammer. So that's already telling you that most likely the market is about to shift to become bearish. I'll show us a few examples before we round up this class. Now, why is it important? Why is price action important? So why this matters? Now, reading what price action trains your eyes to see. Now, when you can by yourself read pure what price action, it will train your eye to see these things. Number one, identify liquidity zones, which means yes, smart money moves. So when you train your eye with price action, you will just identify liquidity zone. Number two, recognize manipulations and fake out. This is one of my best things. Two things I know I am good at. Number one, I can identify liquidity very, very easily. Number two, I can recognize a manipulation move and a fake out move. And also, number three, trade with confidence rather than confusion. Once mastered, it becomes your edge. Your ability to see the market naked and think like an institution. Let me tell you one of the things I get every time from those in my community and group around me. They'll be like, sir, I I could remember one of my students was asking me on the like, sir, do you trade for the big banks? Do you trade for institutions and stuff like that? I just told him that no, I don't trade for a big bank and institution because I don't know where John going to lead me, but hopefully we get there. Now, the reason why he's asking that question is because of when he checks my analysis, the precision is almost 100%. Like when I mean precision, I mean like in terms of how accurate and how you can tell at this point this is going to happen at this point. The secret is because of I've trained myself and I'm still training myself to be able to read raw price action. Now, once you can master the ability to read raw price action, it becomes your edge. So one of the edge I have as a trader, it's not just because of I understand the smart money concept, it's not just because of I understand the supply and demand zone concept. No, one of the edge I have as a trader is my ability to trade without indicators. It's my ability to be able to read the raw price data. I can read it without any indicator, without the help of anybody. And this is my edge. And this is my ability to see the market naked and think like an institution. So although I am a retail trader, but then I think and I see the market like an institutional trader. That's the reason why I was asking that question because of the way I'm analyzing the market is like it's almost the same way with the way the institution analyze the market. The secret is because of the secret is ability to read price action. Practice exercise. This is a class, not an assignment for everyone. Open trading view on Euro USD on the 4 hours time frame. Identify three major swing highs and three swing lows. That's label higher highs and higher lows, and then lower highs and lower lows, depending on the trend that the market is on. Two, find rejection candles. Find two rejection candles, spring bars. Number three, mark what happened next after each one. And then watch price and when support at this distance. So if you reject, so it is just a personal practice you can do for yourself. I'm just giving this because of I don't just efforts, but then personal practice you can do for yourself. And one of the personal practice you can do for yourself also is spend more time on the charts. Spend more time on the charts. If truly you can't want to be good at something and say you are not going to pay the price of spending time with things. No jokes, no jokes, no jokes. So the last slide for today is the conclusion. Now, price action is more than a strategy. It's a skill set. When you stop relying on indicators and start reading candles, structure, and momentum directly, you are finally trading with the market, not against it. So when you stop relying on indicators and you can begin to read the candle structure and momentum directly, you are finally trading with the market and not against it. Do you know what that means? It means that if you are still relying on indicators, you are actually trading against the market. As funny as it sounds, it's a plain truth. I'll tell you the truth no matter how big that the truth is. Because trading with indicators simply means you are trading against the market. Ability to read price action tells you are beginning to trade with the market. Now, learn to read what the chart says, not what you wish it would say. So learn to read what the chart says, not what you think it's going to say. Always learn to read what the chart says, not what you think it's going to say. So that means that when you are doing analysis, don't just think that okay, that's going to do this. No, really big on what why it's doing. So at this point, let me just share my trading view with us. I'm sure some few just a few analysis and I'm not going to go to the I'm not going to go to the first and go show the video. But then before the while my trading is coming on, please any question from the class? Hello, this is Love. Any question? Okay, no question. Thank you very much. I'm just my trading is yeah, very good. So it's a really good question. The notification is going to continue 3 minutes. But then I hope you've been able to learn a few secrets in this long words. You can see I really want to plan, but I hope you've been able to learn a few things on all I'm saying so far.